created by Mindsticks Foundation Trust.
Hello, dear students, and a very warm welcome to today's Explainer. We've got a fantastic and highly practical agenda lined up for our lesson today. First, an introduction to GST. Second, reading a tax invoice. Third, decoding the GSTIN. Fourth, HSN, SAC, and rates. And finally, calculating your tax.
Section 1, Introduction to GST. I want you to think for a moment, when we buy something, anything really, at a shop or a restaurant, what is that familiar three-letter acronym sitting right there at the bottom of the receipt? You guessed it, GST, which stands for Goods and Service Tax. Now, for our historical context, it's absolutely crucial to remember that this massive, unified system officially kicked off across our entire country on the 1st of July, 2017. It was literally a monumental shift in how we handle our everyday financial transactions. To truly appreciate why GST is such a game changer, we have to look at how things used to be. Before 2017, honestly, it was a bit of a maze. Every single state had this highly complicated web of multiple taxes levied at different stages of trading. We had excise duty, value-added tax, VAT, custom duty, and local taxes like octroi. It was, well, pretty confusing. But post-2017, we shifted to a beautifully streamlined system under one powerful motto: one nation, one tax, one market.
So all those familiar old taxes, from service tax and luxury tax right down to central surcharge and countervailing duty, they didn't just vanish. They all funneled directly into this modern goods and service tax bucket. Everything was completely subsumed under one single umbrella. It just makes our calculations so much simpler now, doesn't it?
Section 2. Reading a tax invoice.
All right, let's take all this theory and apply it to the real world. Imagine picking up some sweets and groceries from, say, A to Z Sweet Mart. Looking at a standard shop bill, you'll see some very detailed columns. We've got the serial number, the product name, like Payday chocolate or bread, the rate per kilo, the quantity, and the taxable amount. But what we really want to focus our attention on today are those tax columns sitting right over on the right side.
Right there, you're going to spot two vital components of GST, CGST and SGST. Let's break these down. It's actually quite simple. CGST is the Central Goods and Service Tax. That's the exact portion of your tax money going directly to the central government. SGST, on the other hand, is the State Goods and Service Tax, which naturally goes to the state government. So your tax money is basically shaking hands with both governing bodies.
Now, here's a quick puzzle for you. If you look really closely at the math for every single item, what do you notice about those CGST and SGST rates? Take the payday, for instance. The CGST rate is 2.5%, and the SGST rate is exactly 2.5% as well. The golden mathematical rule here is that the total GST is always split perfectly down the middle. 2 equal halves for the central and state governments. So a 5% total tax simply becomes 2.5% CGST and 2.5% SGST.
Section 3, Decoding the GSTIN. We've all seen it, right? That super long, kind of intimidating string of alphabets and numbers at the top right corner of a bill. Let's demystify what that code actually means. GSTIN simply stands for the dealer's Goods and Service Tax Identification Number. Think of it like a unique roll number, but for a business. It's totally mandatory for any dealer whose annual turnover in the previous financial year crossed 20 lakh rupees. Cross that financial threshold, and you're legally required to have this 15-character code printed on your bill.
It looks complex, but let me teach you how to easily deconstruct it step by step. It's like cracking a secret code. Step 1, those first 2 digits, that's the state code. For instance, seeing the number 27 instantly tells us the firm is registered in Maharashtra. Step 2, the next 10 characters are actually just the PAN, the permanent account number of the firm or dealer. Step 3, 1 single digit showing how many registrations the firm holds. And finally, step 4, the last digit is a checksum digit, which just confirms the code is valid when typed into the GST portal. See? Beautifully logical once you break it down.
Section 4. HSN, SAC, and rates.
So how does the government actually classify every single thing we buy to figure out the correct tax percentage? Well, you'll see 2 different acronyms depending on what exactly you're buying. HSN stands for Harmonized System of Nomenclature. That's a numerical code strictly for categorizing physical, tangible goods, like the butter or ice cream we talked about. But if you're paying for an intangible service, maybe a train ticket or a courier, then we use SAC. the service accounting code. Simple rule to remember. Goods get HSN, services get SAC. It's really fascinating how the government prescribes these different tax slabs because obviously not everything is taxed the exact same way. Essential items like your everyday food grains, fruits, and vegetables, they are zero rated at a wonderful 0%. Commonly used daily items like an LPG cylinder or tea are low rated at 5%. Then we jump to the standard slabs, 12% for consumer goods like butter and mobile phones, and 18% for computers and courier services. And finally, luxury items. Think ACs, luxury cars, 5-star hotels. They're highly rated at 28%. The whole system is deliberately designed to tax basic necessities less and luxury goods more. Section 5. Calculating your tax. All right, dear students, it is finally time to put our theory into practice and calculate the actual rupees and paise. When we look at standard solved examples, whether you're buying a gas cylinder from a local agency or sending a courier from Nashik to Nagpur, the mathematical method is completely consistent. We find the taxable value, calculate the total GST, split it perfectly into CGST and SGST, and just add it all up to get the grand total.
Let's solve a highly relatable real-world math problem together. Imagine Shrikar is buying a brand new laptop. The printed price on the box is 50,000 rupees. And the kind shopkeeper gives him a 10% discount. But the government's prescribed GST rate for laptops is 18%. So can you determine the exact final amount Shrikar has to pay before he leaves that store?
I'll guide you through this calculation carefully. Now, the absolute golden rule you must remember is that GST is applied only after the discount is deducted, okay? So, step 1, finding the taxable value. 10% of 50,000 is 5,000 rupees. We subtract that, giving us a true taxable value of 45,000 rupees. Step 2, we take that 18% total GST and split it. CGST is 9%, and 9% of 45,000 comes out to 4,050 rupees. Step 3, SGST is the remaining 9%, which is naturally another 4,050 rupees. Step 4, we add the taxable value, the CGST, and the SGST together. 45,000 plus 4,050 plus 4,050 gives us exactly 53,100 rupees. And there we have it, the final amount Shrikar pays.
You know, you've all done wonderfully grasping these concepts today, so I want to leave you with an exciting challenge. On your next visit to the local grocery store, or maybe grabbing a bite at a cafe with your family, ask to see the bill. Look closely at it. Can you locate those HSN or SAC codes? Can you identify the exact tax slab for what you bought? And most importantly, can you do the math yourself to verify if the CGST and SGST were calculated correctly? Take this knowledge out into the real world and test it out. Thank you so much for joining me for this explainer. Keep practicing your math, and I will see you in our next lesson.